All right, joining me now is Bill Lee, chief economist for the Milken Institute. Bill, great to have you this morning. Let me pick up where that report left off. Markets encouraged, but waiting for a deal. Is it fair to say that whatever comes next will likely be better than the worst case scenarios that have been floated these last 2 weeks, whether it's 145% on China, reciprocal tariffs on all trading partners? Directionally, Bill, are we moving in a more positive direction?
There's no question that we can't do worse than the worst case scenarios everyone's been dreaming up, because they're getting worse and worse, right? And I think finally people are coming to their senses and realizing that all this tariff frenzy is really an overreaction, and people are overestimating what tariffs can do to the U.S. economy. I just want to emphasize again to your listeners that the U.S. is a relatively closed economy. Imports are 14% of U.S. GDP. Exports are only about 11%. So we spend more on housing and food than we do on imports and exports. So I think we should just sit back and get some perspective as to what tariffs will really do to the economy. People are worried about inflation. Well, most of our inflation is coming from domestically produced stuff like eggs or insurance costs or medical costs or the repairing your automobile. These are services that we spend most of our money on, and those are not affected by international tariffs.
But then there are things like electronics, obviously. I mean, you think about auto parts, and we'll get to consumer spending in just a moment. But Bill, how much comfort do you think it gives the markets that there does appear to be a guardrail, and that when top American retail CEOs warn the president about the impact of a trade war with China or firing the Federal Reserve chair, he does seem to respond, at least in tone?
And that's right. In fact, I think it's quite a relief that President Trump has provided some perspective on how he feels about Chair Powell. I think President Trump recognizes that an independent Federal Reserve, independent central bank in general, is the best thing for the United States, because around the world, the studies at the IMF and other places where I used to work have shown that countries with an independent Fed or independent central bank tend to do much better than countries where the banks are beholden to the Treasury or the elected officials.
Yeah. I wanted to get your take on the latest Beige Book data. So this is a report. It's released 8 times a year. It comes with sort of anecdotal information from business owners, economists, and the market participants in the 12 Federal Reserve districts. It's anecdotal, obviously, Bill, but it can be insightful. What were your takeaways from the Beige Book release yesterday?
The Beige Book reflects, again, a lot of the tariff frenzy that's been reported, and it's yet another data point in the soft data that shows that the U.S. economy is tottering on the edge of, incredible anxiety. Businesses are saying that we're going to have to cut back on investments. Consumers are selectively spending. In fact, they're tending to spend on items where they anticipate cost and price increases. And I think one of the things that the Beige Book is actually showing us is the effect of all of this frenzy that's being whipped up by the marketplace and amplified by repeated stories of disaster. What the Federal Reserve actually does with soft data is that it listens to it, it looks at it, but it looks at it as a forecast of where the hard data might come. If the hard data come in like the soft data are showing, yes, absolutely, the Fed will do something either to raise interest rates if the economy goes off the deep end, or I'm sorry, lower interest rates if they go so deep end, and if the inflation goes up, then they'll raise interest rates. But it's not until the hard data show what's going on, and it's not just one data point; it's going to be a trend. And so I think the Fed really will react to the soft data once it becomes hard data, and that's the real question: will it become hard data?
Yeah, and that's also the question. And what hard data would it show up in first? I mean, we get jobs data or weekly jobless claims in a few hours. I mean, that's obviously weekly. We get the labor report every month. We get retail sales every month. Where would you expect it, Bill, to show up first if, in fact, it does translate from the soft data to the hard data, and we actually start to see it in consumer spending trends and labor market trends? Where would you see it first?
Great question. In fact, the Fed will always look for the labor market data as the most important data from which to change policy. But labor market data tends to lag everything else. So for me, I would look to where retail spending is going and where the CPI numbers are. Those will show how much prices will actually go up, and whether or not they stay up. Because again, the Fed will not act on one data point of CPI. They'll act on 3 or 4 once a trend is established, and that'll take a while. And the key is even though companies say, oh, we're going to be raising prices, the key question the Fed asks would be, are the prices going to stick once you raise them? because people will say, my God, this is way too expensive. I'm going to look for an alternative. Given that the people only have a certain budget to spend, they will have to cut back on other things. The reason why supply chain disruptions were so inflationary during the Biden administration is because we had a huge injection of fiscal stimulus. People got more money to spend. Right now, we're not getting that fiscal stimulus, and I think the price increase that are being threatened may not always hold.
But Bill, to be fair, I mean, there were supply chain disruptions, not necessarily because of the Biden administration, but because of COVID, and that impacted a lot of places around the world.
Oh, without a doubt. But again, even though supply disruptions take place and prices go up, they will not stay up if people don't buy that stuff and say, look, I just can't afford it. The reason why the prices stayed up and continue to go up is because of the extra stimulus package that people got.
Yeah, and that's why the hard data is really important. Bill Lee, appreciate you being here this morning. Thank you.
Thanks, Fab.
Well, it could be New Jersey's largest wildfire in the past 2 decades. Why the fire continues to grow, despite the efforts of firefighters. We'll be right back.
Take your business from launch to legendary with Shopify. Sell more with the world's best converting checkout and turn analytics into opportunities so you can scale further, faster. Take your business to a whole new level. Switch to Shopify. Start your free trial today.
Okay, everyone. Our mission is to provide complete balanced nutrition for strength and